Hey guys, it's Chad Larson with MLD Wealth Management. Here today with Shubha Dasgupta as the CEO of Pineapple. Pineapple is a leading mortgage fintech company, or the fastest growing in Canada, actually, focused on digitizing and transforming the mortgage landscape and creating better customer experience. We've been investors in Pineapple for a while, and I've been excited to connect with Shubha almost on a monthly basis, getting phenomenal updates from the growth of the company. I'm excited about the trajectory of the business, and I thought this would be a great time just to corner him down for 10 minutes, and maybe he could give a little bit of background on himself. Pineapple as a business, the concept of how it started, where they began, and where they're at today, and what the future holds. So thanks, Shubha, for being here with me today. And maybe you could let our private clients know a little bit more about yourself and your company.
Absolutely. Chad, thanks so much for setting this up and for doing this. I think it's a great initiative and a great way for us to share the updates as to what's happening at Pineapple. First off, I would love to just start by thanking you, as well as all of our private investors, for all of the support and trust that they've put in us throughout the year. Really, this is a journey that can't happen without the team involved. We always say one team, one dream here at the company. And we want all of our shareholders and investors to know that you are truly a part of this team, and your support and trust mean a lot to our progress and how we're innovating in the Canadian mortgage landscape. With that being said, would love to give you a little background on the company first and get you up to speed as to who we are. As Chad mentioned, we are a leading Canadian mortgage fintech company focused around innovating and digitizing the Canadian mortgage landscape. We're really taking what has been a very antiquated industry, which has been filled with, paper forms, documentation, the dreaded F word like fax machines, and we're trying to convert it into something that's more seamless and digitized for the customer experience. We wanted to ensure that people still lived at the forefront of the sales process, but that everything else could be digitized and seamlessly kind of managed through a technology process. We started this company 5 years ago, and we're so proud of where we are today. This year in 2021, we closed the year out with just over $2 billion in annual mortgage sales volume, which makes us the fastest company in Canadian history to hit that milestone, and also gives us 5 years of constant 100% growth year over year. So we're still very confident that we can continue this trajectory, and there's still a lot of room for us to grow. We've also been able to really transform what that digital roadmap looks like in the Canadian mortgage industry, with things like automated customer segmentation, so that we're able to really identify who a customer is, what type of mortgage they're looking for, and make sure they get a very individualized process designed specifically for them. We've also really focused heavily on the use of data and data analytics to make sure that customers have a constant real-time update as to what mortgage options and solutions are best suited for their individual needs. As we begin to implement and execute on this, we've seen tremendous growth, not only from within our organization, but also incredible feedback from the Canadian population and how they're receiving this product into the environment. Currently, we have over 550 mortgage agents that are utilizing this platform across the country, and we just began national expansion earlier last year. We were predominantly focused in the Ontario market for the earlier stages. And last year, we began expanding into Manitoba, Alberta. We have British Columbia coming later in Q1 of this year, as well as Atlantic Canada and Quebec coming later in Q1 or early Q2. Last year was also an incredible year for us, just from a company standpoint, in terms of some big milestones that we achieved. The first one was a big rebrand. So we started the year as a different company, as Capital Lending Center, and we ended the year as Pineapple. And that was for us to really deliver on our philosophy of building a household name within the Canadian landscape and making sure that Canadians had a brand that they could resonate with. Since this rebrand, we've begun to really elevate our marketing and get more exposure through web visits, social media, and other interactions and platforms. In 2021, we also completed our 3-year financial audits, as well as beginning completion of our prospectus to begin setting us up for, a successful public markets listing. Now, it was always important for us as an organization to stay more proactive than reactive. And we never wanted to fall prey and be victim to one of those companies that kind of started the journey and then had to do the work as we're going through the journey. So we wanted to make sure that we were well positioned and well prepared to go into this public listing, whether it be through an RTO, TSX IPO, all that remains to be seen, but we're certainly well positioned and ready to go. Go ahead, Chad.
Yeah, I was just going to bump in. I didn't want to slow you down. I think, when I look at the onset, maybe some, because I know by way of background, this is not your first forte into the mortgage business or a mortgage fintech. You were recognized as Mortgage Global Top 100 Executives. That was inciting positive change and growth within the field. And since 2018, you've been featured on the annual Canadian Mortgage Professional Hot List as the industry's top leaders, and appointed the president of the Canadian Mortgage Brokers Association, Ontario. So what's going on as a fintech and as also kind of boots on the ground mortgage. When I look at who my average private clients are that are invested already in Pineapple by way of the former corporation before rebranding, CLC, and potentially new investors and or clients looking to add to positions on the successful IPO. My clients don't have mortgages. Maybe their kids do. My clients are affluent, successful Canadians that, if there is a facility in place, it's largely for, liquidity management across their portfolios or real estate holdings. What's it like? We all know it's a pain in the butt to get a mortgage. There's two ways. You walk into a bank branch and you get some transient kind of entry-level person to bumble through a bunch of stuff. I've used mortgage brokers in the past. I prefer them because they, much like I prefer being an independent investment advisor, I'm able to shop for the best pricing, best execution, and best products for my clients. I think some of the questions or feedback that would be in and around, interest rates have been historically low. They're looking to raise. The Ontario market's been, on wheels, and Canadian real estate in general has been on fire. How do you, what's your outlook for mortgage volumes? How much of your business is earning the business away, or are they new entrants coming into the financial market because you have so much data on your business?
Absolutely. And all great questions. The one thing about the mortgage industry that's always been appealing to me and always been attractive is the fact that we always have a consistent and continuous opportunity, regardless of economic circumstances. In times of, high purchase opportunities, we see a lot of, new to Canada, first-time home buyers, new housing formations that are buying properties. And this has kind of been the market over the last couple of years, 660,000 plus transactions every year for the last few years. So really, we've been driving down, 100-kilometer-an-hour highway at about 150 kilometers an hour. Now, what that looks like kind of in the forecast ahead is we do anticipate some adjustments. And this is predominantly going to be led due to the lack of housing supply across this country, which is, certainly spoken of in today's media. But it's a problem that is on everybody's radar right now. But the expectation is that we're going to drop from about 660,000, new units being put out on an annual basis or transactions to about 570 to about 580. Now, when we look at this in terms of historical norms, this puts us right on target with like 2018 numbers. So instead of going 150 down that same 100-kilometer highway, we're really just slowing down to about 120, but still ahead of, historical numbers. Now, the other element that comes into play, and why I was referring that the mortgage industry always has this continuous opportunity or this continuity to it, is that We also have incredible opportunities for refinances and debt restructure. So as Canadians begin to benefit from this massive appreciation and housing price growth that we've seen in the past years, they're able to begin to access a lot of that equity for wealth building strategies with partners like yourself, getting into real estate investment or looking at real estate as a wealth building strategy to their future. So we're seeing a lot of Canadians begin to do that, leverage their asset and utilize that for wealth growth. And we're seeing a lot of Canadians that are, putting that towards not increases, improvements. So using equity in their home to rebuilding their homes or renovating their homes and just kind of changing the landscape or the dynamic of where they live. The other element of continuity is renewals. Traditionally in Canada, I think 86% of all Canadian mortgages are in a 5-year term, which means that every 5 years we're revolving these Canadians into new loan opportunities. 2017 was a historical year where 51% of Canadians renewed their mortgage, which means that those same 51% that didn't break their mortgage midterm are going to come up for renewal again this year in 2022. So
Okay.
we're going to have a huge opportunity to reservice these Canadians. So all of that aside, the other big area of focus and excitement for us is today, Pineapple only has about 1% of the overall market share. Last year was a $500 billion market, and we did our $2 billion. So there's so much opportunity for us to really regain market share from within and then begin to look to extend market share through, immigration and population growth, other avenues and other areas.
Lots of wood to chop, so to speak.
Absolutely.
Tell me a little bit about the technology, like on both sides, as a customer and as an agent, and how it works within Pineapple briefly.
Yeah. So when we started, we really focused in on the agent side of the business from a technology perspective. And that was for a main reason of having a strong infrastructure for which clients can feed into. We never wanted to have what I'll call the shiny penny for clients to say, hey, we got this digital process. And then it feeds back into manual, shuffling papers and a bunch of people in the back office running around. So we wanted to ensure that the technology on the back end from an automations and process perspective was seamless before we ever pushed it forward to the customer. So the first 3 years of our company was focused around building that. And really it's around automating the entire workflow. So applications come in, we can determine what best lenders and options are suited for that customer. We can take that file right through a digitized and automated workflow, collecting documentation, getting it submitted to the lender, getting feedback, and satisfying various conditions and requirements of that loan. Even now giving the client an opportunity and an insight into that window with a client-facing portal. So now they can be a part of the transaction, they can upload their documents, kind of check on the status of their loans right throughout the process, and involving various stakeholders as well. So now the realtors and the lawyers, everybody can participate and play within this one ecosystem on the Pineapple platform, and everybody's unified to make sure we're all working towards that common goal of helping the client close the transaction.
Fantastic. Can you, excuse me, within that ecosystem, so we've heard there's a incredible opportunity in front of you guys. Do you find I guess trying to frame the question the right way, as this evolves, do you see the company evolving with so much in front of you still? Are there complementary, services or opportunities within your ecosystem, like home buyers insurance, mortgage insurance, like within that ecosystem of a community of Pineapple? Is that something on the horizon?
Absolutely. So this year, actually, we are entering into an agreement with a partner to bring us on as an insurance MGA. So part of mortgage approvals here in Canada is that all mortgage approvals are regulatory required to provide an insurance offering. Typically mortgage companies offer a third-party product to be able to, it's generally a creditor policy to be able to alleviate that regulatory issue. So for us to be able to become an insurance MGA, and we've already wholly owned the subsidiary company, Pineapple Insurance, we're going to begin offering our own insurance offerings on these approvals, which is a whole new revenue stream for us and a channel that we're, very much looking forward to being able to increase our, not only the customer experience, but also the business economics and increase in revenue. So that's one channel. Go ahead.
Okay, so does that make sense? Now, so you're the intermediary, the super, the super slick cog in the wheel of, pairing a borrower to a lender. Who are your lenders?
So we have strong partnerships, very strong partnerships with all of the top Canadian mortgage lenders that participate in the Canadian broker channel. So TD Bank, Scotiabank, Home Capital, Home Trust, Equitable Bank, MCAP, First National group of companies, all of the major players. We have top tier relationships with them and incredible partnerships.
Amazing. I think we've covered a lot. I don't want to, you and I can go on for hours. If there's one thing, I don't know, you haven't provided a lot of guidance. You guys hit an amazing target of $2 billion this year and have got all your ducks in a row. So I don't want to put you on the spot, and I won't on a recorded Zoom call. But my guess is typically I like to do this once a year and distribute it, some commentary to clients. But, I would say without feedback being needed to give it, continue the great job that you and your team are doing. We're excited to be along your journey. And if you need anything, and if there's an opportunity for MLD and their clients to play a bigger role within the growth of your company, we're happy to continue to support you guys. So with that, I just want to say thank you for your time, and we'll catch up soon.
Pleasure's